Hello again. So you are an angel investor. You already have access to angel investment deals, and now you are planning to invest some of your hard-earned money into some of those AngelList deals. Once you have joined other syndicates, you will know that deals are start flowing to you. If you have joined about 20 to 40 very popular syndicates who are very active, you are going to get about an average 50 deals per week. And it is very hard for any investor or the investor who is alone to make decision on those deals. So you must have some investment thesis always with you, which is going to guide you whether you are going to invest in a deal or not. Here in this video, we are going to learn how quickly you can get an idea about an investment deal and decide whether you are going to invest in this deal or not. This video will help you to quickly understand what is available in a particular AngelList deal, and if it interests you, then you can go and dig more about in this deal before making your investment decision. So let's get started. For every angel investment deal, you are going to get a quick snapshot as shown in this image. Very first thing, you are going to see that what investment round it is. The deal will have one particular investment round, like as shown here is a seed round. However, your options will be seed, pre-seed, seed plus, investment rounds such as A, B, C, D, E, F. Depending on what your investment philosophy or investment strategy is, you need to very quickly make sure, is this deal part of your investment philosophy or not? Some investors invest deals where the company has some significant momentum, means they always invest when company has at least X amount of growth and Y amount of revenue, only then they are going to invest. Some investors, they try to invest early in the deals where they could get better valuation. However, they understand if a deal is in very early stage, you have very high risk of losing your money. So depending on what your angel investment philosophy is, make sure that deal qualifies that investment round. The next item in the list is amount raising. Depending on how much money is being raised in this round, it always gives you a better understanding about company. Some companies, they have some metrics to prove that this amount which they are raising in this round is going to add significant value to them in coming months and years. The amount is being raised also shows how the founders are thinking about their business and how they want to act on it in next coming months and years. Amounts could be anything. It could be few 100,000 and all the way to few millions to maybe tens of hundreds of millions. It's all depend on which round they are and what their needs are. It is very important for you to understand which market this company is, how big that market is, who the key players are, and then look into that amount and see, is this is the amount which is going to give this company a fighting chance. Your experience should also suggest you, is this amount good enough for this company to build a product which they are claiming in their deal. Anyway, the investment amount gives a significant insight about the company and the deal. So do not overlook it and give your enough consideration before making your investment decision. The next item in your list is how this amount is being raised as. The options will be safe, equity, or convertible debt. Depending on what your investment philosophy is, you need to decide whether this investment type is something you are comfortable with to invest. Every type of investment has its own advantage, and depending on your investment philosophy, you can make a decision. In your deal snapshot, the next option is to understand the share class. The options will be either preferred or common. Mostly it will be preferred. As being angel investor or any kind of investor, you should know the difference between preferred class and the common class. You must know that as being the preferred class equity owner, your investment interest will be taken care ahead of common stockholder. It means if and when the company is making revenue or profit, you will be the first given profit share compared to the common shares holders. So make sure you make a quick check and understand that this deal which you are going to invest has preferred types of share class. Next in the list comes the money cap. Your options will be is a pre-money or the post-money. Depending on the deal, either it's going to have the pre-money cap or it is going to have the post-money cap. If it is pre-money, you need to understand that the company is going to raise X amount of dollars based on the current value as given in the pre-money. If the money cap is shown as post-money cap, then you need to understand that this investment round is also included in this money cap. So the value what you are going to see already has this investment round amount integrated in it. And depending on this allocation and your share in this investment round, you are going to get your equity ownership in this company. So make sure you understand both post and pre-money cap and this investment round, and finally your share in this investment round to make sure what percent of ownership you are going to get against the money cap. The next in our list comes pro rata rights, whether they are included or not. You must know that as these companies raise more money in future rounds, your ownership or your equity in that company dilutes over the time. To protect you from the dilution, you need to make sure if you have pro rata rights included in the deal or not. If you do not have pro rata rights included, it means you are going to dilute your equity in that company if and when the future rounds are going to be raised. If you have pro rata rights included, it means in those investment rounds you will be given an opportunity to invest some money depending on how much money is being raised. But if you invest in those rounds, your equity or your ownership in that company will not be diluted. It is a very important aspect of any investment. So please make sure you have given good consideration about it. The next comes allocation. Depending on whom you are investing with, could be syndicate lead, would be another angel investor, you are going to see the allocation given to your lead. Always take a look that depending on the amount is being raised, what is the allocation given to your syndicate lead. Allocation just show that among all other syndicate or lead angel investors who are investing in this round, what is the share given to your syndicate lead or the lead investor. It's a good criteria to understand where you and your team exist in this overall investment round. Sometimes this allocations also has the setup fee included in it. So just make sure what is the exact allocation and what is the setup cost also included in it. Taking a look at setup cost and giving consideration to it is another aspect of understanding AngelList deal. Higher the setup cost, the less amount will be used from your investment check in the actual investment. The setup cost is the amount which is going to be taken from your investment, and the remaining amount means the given amount minus the setup cost is the final amount will be used as your actual investment in this deal. Depending on how your syndicate lead or the lead investor is associated with this overall investment round, the setup fee or the setup cost is set based on that. So it's better that you know what the setup cost or setup fee is for this round before you write your own check, because what you write is not your actual investment. In some deals, the setup cost is another good criteria to understand how your syndicate lead or the lead investor is associated with this overall investment round. In general, the lower the setup cost or setup fee is, the higher amount will be used as your actual investment, which is good. Next, please take a look at how much the syndicate lead is investing in this investment round depending on how his or her allocation is. If syndicate lead or the lead investor is investing large sum of money, that should give you some confidence that the lead investor or the syndicate lead is thinking highly about this investment depending on their investment philosophy. It may be possible that your investment philosophy could be different than his or her. However, it is good to know that how much money is being invested by your lead in this deal. If your interests are attached to your syndicate lead or the lead investor, the syndicate lead investment amount should also be a criteria for you to make a smart investment decision. The next item in our list is carry. Carry percent is a value which you are going to share with your syndicate lead or the lead investor or the fund manager, depending on when you are going to get profit from this particular deal. Carry is a percentage. It means that depending on what your profit is, that carry percentage profit you are going to be sharing with your investment lead or syndicate lead. Higher percentage means you are going to give a lot more money from your profit share, versus if you have lower carry, it means your profit share will be lower. So it's really very clear that the lowest carry you could get in a deal is the best deal for you. So if you have good relationship with your syndicate lead and you are investing significantly, you can definitely talk with your lead and get a better carry which makes sense for this investment. Even within a group where various angel investors are investing along with their syndicate lead or the lead investor, it is possible that everybody has a different carry, because it's all depend on how your relationship is with your syndicate lead and what size of investment you are doing. So make sure you give a good attention to the carry associated with the AngelList deal. Another very important aspect from an AngelList deal is the minimum investment. Most of AngelList deals comes with minimum $1,000 or minimum $2,500 amounts you have to invest in a deal. Sometimes deals look so good and you would want to invest even more. Sometimes you have less confidence in a deal. However, to maintain your portfolio integrity and adjusting your investment philosophy, you might want to invest in a deal at a higher amount or a lower amount. So given that what the minimum amount needed for you to participate in this deal, make sure you give a good attention to the minimum investment amount and also cross list this amount with your investment philosophy to understand so this minimum amount is going to work with you. Let's have a quick recap. In this video, we looked at the snapshot of AngelList deal. We quickly understood various items available in this snapshot and evaluated each one of them with our investment philosophy. Once you quickly cross-check this quick snapshot with your investment philosophy, that gives you a good understanding whether you need to go and do the deep dive in the angel investment deal. Because this quick snapshot is just the introduction to the deal. Once you qualify that this snapshot is definitely interesting and it's worth to look into the deal, then you can go look into the deal info and try to digest every piece of information available in those documents, because every statement means a lot and every information is going to either let you decide in this investment deal or will stop you making that investment. So my suggestion would be that please thoroughly look into a deal before making any investment decision, because it's your money and you have right to invest it smartly. So that's all I had in this video for you, and I'm hoping to see you in my other videos. That's all, my friends. If you have enjoyed our content, please like it, share it, subscribe it. And finally, please remember, be good and do good. Thank you.